to help them make a logical decision and not an emotional based decision. So if we get that help, that would be great. 2023 housing at mid-year. The good news, we've got a reality check and we've got an outlook. Housing is normalizing after 2 unprecedented unicorn years. Return of seasonality is a welcome sign and prices are rebounding. So the unicorn years is what we're talking about is the pandemic years. That was when everything went crazy. People were out wanting to buy their forever home. People wanted to buy their escape home. And home was like the main theme during those years. And it really set the market off in a crazy direction. We're seeing more of a return now to seasonality, seasonal real estate, where things slow down in the winter and get more busy in the summer. And prices are rebounding. We had a bit of a shock to the system with those interest rates going from 2.8% to 7%. Now they've come down and people are starting to feel a little bit more comfortable and ready to get out there and start buying houses again. The reality check is homeowners have limited options between rates and inventory. That means you can't afford as much house anymore. So your market, where you're looking, the price range is probably going to be smaller. And also the inventory is still pretty tight. Listings are still declining because people that live in houses don't want to get rid of them because they've got a great interest rate. It's plain and simple. Affordability is still a primary challenge. The outlook is new construction is growing, offering more options for buyers and sellers, and we're getting more back into the expectation of a moderately active summer season. So like it used to be back in the good old days. Housing sentiment for Q2 of 2023, market activity survey conducted in May. 18% of the people that they surveyed said they were thinking that they wanted to buy a house. Only 16% want to sell their house. So that means, folks, that there are going to be more buyers than sellers, and it's basic economics, supply and demand. Average credit score in the United States is healthy. We're up to 714, which is incredible considering back in 2010, the average credit score was 689. The buyers out there are financially healthy, which is good for the market. Credit score of your average buyer is 765. That's the median credit score. So there's a lot of people that are, half the people are above 765. Again, great for the market and just the economy as a whole. The new normal, interest rates between 6 and 7%. And, back in the old days, that's what it used to be like. 6.71%. You've seen it starting to balance out now, so we're thinking it's probably going to stick around that for a while. Lawrence Young, chief economist at NAR, states that mortgage rates heavily influence the direction of home sales. Relatively steady rates have led to several consecutive months of consistent home sales. So that stability is leading to people realizing, they're not rates. When this all happened, everybody's like, we're going to wait for rates to go back down. Well, rates don't look like they're going to go back down. It looks like they're going to be it's going to be this way for a few years. Existing home sales steady. So this here, as you can see, this big drop off in the beginning of 2022 was interest rates went up drastically and inflation went up drastically and everybody freaked out. Stopped buying houses, stopped selling houses, everything stopped. Now we're seeing that the sales are starting to come up and they seem to be balancing out. So we're seeing a change in the direction, I guess is the best way to put that. And Lawrence Young, again, chief economist at NAR, says available inventory strongly impacts the home sales too. Existing home sales activity is down sizably due to the current supply being roughly half of the level of 2019. When your inventory is down that drastically, it's going to be tough for buyers. Month of inventory of home sales for sale. Over here, 3%. Over here, 2011, almost 10%. So this means that I'm not 10%, 10 months. 3 months versus 10 months. That means if we didn't have any new houses come on the market, all the houses would be sold in 3 months, where it used to be 10. So that shows you, the amount of supply that we have. Supply improves, but remains limited. There were 7.1% more homes for sale in June compared to the same time in 2022. This means that there were 41,000 more homes available to buy on a typical day this past month compared to a year ago. So that's good. However, the inventory growth rate for homes actively for sale continued to slow for the 4th month in a row. So it's slower because people just don't want to sell and get rid of those great interest rates. Active listings does improve. So again, we see this big drop off. We've seen a comeback of active listings, dropped off a little bit. Now it's starting to come back again. So it's better than it was in the pandemic years, but it's not where we need it to be. We needed it to be much, much higher up there, but it's getting there. It's a trend. We're seeing some trends. Realtor.com states in the final week of June, we noted that inventory actually declined on a year-over-year basis for the first time since last April. This substantial slowdown was primarily driven by fewer potential sellers opting to list their home and the market, which lapped the period of higher inventory growth that started in May of last year. Active listings greater than new listings for 13 months in a row. So this shows you here, we had a little bit more of a balance, and now it's more of a balance right over there. And now we've got a big imbalance between active listings and new listings. So there's not enough coming on the market to fill up what is actually on the market. So that needs to turn around. And Realtor.com stated in June, the number of homes newly listed for sale declined by 25.7% compared to the same time last year. New listings remained 27.6% below pre-pandemic 2017 and 2019 levels. In fact, the pace of new home listings year to date is even 16.4% lower than the first half of 2020, when the real estate market was still contending with pandemic-era closures, restrictions, and uncertainties, highlighting just how short on new option buyers in today's market really are. So it's just, it sounds like I'm beating a dead horse, but it's just a tough market. New listings now below previous years. Here's the pandemic year right here, where you see it just goes zip, and then picks back up. This is this year right here, affected by interest rates. This is a great one here. Tom Barkin, Federal Reserve Bank of Richmond. I didn't fully anticipate how much the move in interest rates would convince people not to put their houses on the market. I think what the Fed was hoping to do by raising interest rates, one of the things, this isn't the only one. I mean, it's a complicated story. They got a very tough job. I wouldn't want their job. So I'm not trying to be critical, but they were expecting home prices to come down, and they have not. And they have not because by raising the rates, you've constricted supply. New listings down 99% of the country. Pretty clear. History has shown that higher rates may take the steam out of rising prices, but it doesn't cause them to collapse entirely. This is especially true in housing market where the demand for homes continues to outpace supply and keeping the pressure on house prices. We all know that. Yes, home prices rebound, reflecting market dynamic. Realtor.com listing price, what buyers see. This is interesting. This shows you here. This is going to be, so we're looking at the peak there was 2022, June 2022. Rising rates led to calling for another crash. So rates went up and everybody freaked out. The market's crashing. The sky is falling. Oh my God, we're all going to die. Well, it didn't happen. And now everybody's on realizing that, and things are starting to go back up, as you see there. So listing prices are going back up. Realtor.com listing price, what the buyers see. Same thing. Everybody freaked out. Now it's coming back up. Listing price growth reflects market and return to seasonality. So we're seeing that, it returns to the seasonal fluctuations where we have more homes coming on the market in the summer. Prices go up a little bit in the summer, then they come down in the winter. And this kind of just reflects that year over year. And this here is the percent change in home values. And the red is the freakout zone, the freakout time, I call it, is when rates went up, inflation was really high. We're looking at July 22 right here, all the way through. Now we're coming back up, and we are coming up, coming out of it. We're coming out of it. So prices are going to back up, percent change home value starting to go back up again. If I were trying to make a case that the decline in home prices that began in June 2022 had definitively ended in January of 2023, April's data would bolster my argument, and that's Craig Lazar, Managing Director, S&P DJI. So we're seeing a lot of people say the same thing. Home price expectations, they did a survey of people and said, what do you think is going to happen? People have decided that the prices are going to go back up. Outlook, folks. Housing prices continue to show stronger growth than what was previously expected. Housing performance is a testimony to the strength of the demographic-related demand in the face of baby boomers aging in place and Gen Xers locking in historically low rates, both which have helped keep housing supply at historically low levels. Home builders continue to add to that supply, but years of meager home building over the past business cycle means that the imbalance will likely continue for some time. Especially in Sonoma County, we don't have a lot of new houses. The new houses we have are mega houses, and not everybody can afford a mega house. We do expect housing to be supportive of the overall economy, and that's Doug Duncan, Senior VP Chief Economist of Fannie Mae. So, good news, buyers are active and the housing market is normalizing. Prices are rebounding. The reality check, affordability remains a challenge and homeowners have limited options. Outlook, new construction is growing, offering more options for buyers and sellers. With rebounding prices, homeowners are ready to move in a solid position. So, if you're selling a house, it's a good time. There's people out there looking to buy a house. You're not going to have to take it in the shorts on the price. Buyers are active as housing is normalizing. So overall, market's looking pretty good. Things are getting better. Amazingly enough, the sky hasn't fallen. If you're looking to want to buy or sell real estate, give me a call. I'd love to help you out. If you like this content, please share, like, subscribe, comment, do all that stuff. Help us to get it out to everybody. We'd love to help you out. Again, my name is Dave Millar with the Millar Group, number 707-217-1786. I hope you have a great day.